what we're doing is we're nominating Mike Abbate to be the CEO of Ionic. So Mike is extremely familiar with Ionic. He bid on Ionic or bid on Celsius, was part of Novawulf.
I was intimately involved in the status of all these assets during bankruptcy. That was before Cedar Vale was part of the fleet.
A few moments later.
Why did the company need $225 million to start with? Right? Like that's probably the most absurd issue that we need to address here. It was this board who put that amount of cash on the balance sheet. That's creditor cash that should be returned to creditors.
What? Bro, what are you talking about, man? Bro, I'm out, man.
As you heard by the comment of Michael about it on Mike Cagney's space, this really put me off, and it's a red flag to me. So I usually assume that everyone is smarter than me, especially when I'm dealing with hundreds of millions and a party that has their legal team, has their financial people. So I prefer to be paranoid in this case. And if you even consider his comments that he said that he was well familiar with the mining side, especially in Texas, this is even more appalling. So I have a couple of graphs here, which I believe will easily explain why we needed the 225 million. And there isn't much room for this value. So let's have a look. Here on this graph, you have the liquidity, which is Bitcoin and cash, or dollars in this case. You have the Bitcoin holdings in orange, and I do not include any production from Cedar Vale. And here you have the expected cash. This is the cash position and the total cost. The total cost includes building Cedar Vale and has 3 payments. I put one payment on emergence at 25 million, another one in July at 22 million, and one finally in December also 22 million. So let's look now at this graph, and this is more or less what we were seeded. So we were seeded with 225 million, plus the previous mine Bitcoin was vested also in Ionic. And we are going to assume here that Bitcoin remains at 55k. So you can see we have here 548 Bitcoin. This is the liquidity we were seeded. And here is the total cost, which includes Cedar Vale, and the operational expenses that were reported on the month of January. So you can see here, basically this line is the Bitcoin in terms of dollars, and here is the total cost. So by just looking at this line, we should have been operational cash flow positive until June at 55,000. And as the time increases, you can see that our cash position goes down, and so is our liquidity. But if you don't know, Ionic Digital is making a bet on Bitcoin. So they are going just long on Bitcoin, and they are hoarding all the Bitcoin, not selling a single Bitcoin, at least until the shareholder update. And also based on Arkham addresses, it's very unlikely they are selling any sizable position in Bitcoin. So you can see here, this divergence between the total liquidity and the total cost is how much money you are going to lose at 55,000. So you can see here, there's some calculations. A positive value here is the amount of money we lost. So we, in this case, at 55,000 by the end of December, and not including any profit from Cedar Vale or accruing costs besides the bailing out, we lost 22 million. So if we just liquidated the total cash and Bitcoin position in December, it would mean another 3.37 distribution based on your total claims. I do not include the value of sites here. So you can see here also that the cash starts reaching very low numbers. So this is around $30 million. And And I believe if you look at this, you can understand that the management and the plan of Ionic was to basically endure this entire year mining and give like 1 year for Bitcoin to appreciate. It's a calculated bet if you take into account the US elections and the Bitcoin halving and the historical price volatility. So here let's now look if Bitcoin is at 60,000. So you can see here the divergence is even lower and we just lost 10 million. The total liquid value if we did a liquidation is 3.6, so not a very big difference. And here on this last graph, we assume that in December the Bitcoin price reached the previous all-time high that we achieved this year. So in this case, we made money, okay? So this blue line, compared to the total cost, including the build out of Cedar Vale, means we are profitable in terms of liquidity. The cash is still down, and I do not include any sort of proceedings from Cedar Vale. If Cedar Vale is profitable, you should have a steeper increase here in even steeper increase here in Bitcoin and the total liquidity. So now let's look if the company was just seeded 100 million. Now this is a completely different story. So you can see here, around July, we have to start selling Bitcoin, okay? And things only get worse from there. So you can see that the cash here on July starts to be negative, so it means that you have to sell Bitcoin, and you can see here a correlation between Bitcoin and the liquidity value. And the costs, the divergence between the costs in terms of liquidity is just massive. And here now you have at 60,000. So 60,000, the difference is that you end up with 180. So here in this last graph, we have lost massive amounts of Bitcoin, cash, and time that we could have liquidated the assets and given much more money to creditors. So in summary, you can see that the difference by being seeded 100 million with 225 million is massive when it comes to your total liquidation. In the case that you are vested with 100 million just in cash and the previous vested Bitcoin, you end up with a total liquidation based on your total claims of 1.35 versus 4.25 if Bitcoin kept at 55 and reached the all-time high this year on December. So just on this alone, it's a massive difference. And one of the things that you also have to be mindful, and I brought this in the space I run, is that if Bitcoin reaches around 52,000, you can see that this line, which is the operational cash flow versus the total cost, starts to invert, so it goes lower below the total costs. And it should be lower here after July. And the reason I highlight this is if the shareholders choose to elect a new board or new members which have bias or are looking for an excuse for liquidation, they can use this short time period as a way to have their agenda met. So they can basically say, the company is not producing cash, we are cash flow negative, so it's better to just liquidate everything. The reason I'm bringing this up is that Michael Abbate and Mike Cagney were involved with the initial Novawulf plan. And Michael Abbate is a distressed investor, as I recall.
Here, Jason and Michael, why have you wanted to get involved in the Celsius restructuring?
Mike and I both have a distressed investing background,
And the initial Novawulf plan was clear as day that a bunch of distressed investors made that plan. It was made to return the most money to them with the least amount of risk. It was not an honest attempt at making the company work. Just for perspective, the initial plan, if I recall correctly, involved a 50 million investment into the Ionic company. But this was basically paid in 1 to 2 years with the management fee that was tied to the net asset value. So this means even the investments that were not liquid were being used to indirectly prop up the performance fee. And now, this was clear as day, and you had Tony and Simon in the speaker role, and they didn't push against this. So it had to be me to actually publicly push this and say that they were not doing an honest attempt at making the company work. And this was not a partnership. This was just a bunch of distressed investors trying to make a quick buck. And yeah, that's why I say it's a red flag, because one, you don't know the numbers and you are kind of winging this, which I think we had enough of that. And what's even more ironic is when you have Michael Abbate telling that he doesn't understand why the company needed 225 million. He's basically telling that current management will have done a better job than him, because as you've seen by the graphs, if Ionic wouldn't be seated with this amount of cash, they would have been selling Bitcoin, and then probably 2 months it will have been run to the ground. So I'm not telling that Michael Abbate has no value. I think he can bring some value, but probably more in a board seat. As a CEO, I think you need someone that directly deals with mining, especially maybe on Texas, or is basically tied to the energy business or the renewable business, or sort of a hybrid background, as I think that can give some real advantage and maybe build on the strengths that Ionic Digital already has. Now, if you want to go with a different perspective, maybe the more paranoid one, then there are comments in Mike Cagney's space that can support such view.
Form of a secondary capital injection that would take existing shareholders out, but the intent is to get liquidity as quickly as possible and at the highest value that we can. It's a very different environment now than it was a year ago. Potential buyers are in a much better shape financially today and can likely pay considerably more than they could 12 to 18 months ago when reorganization was first contemplated. If we decide the best path is organically to build something out, or strategic combinations therein, we would have to find a near-term mining partner to transition off of HUD-8. He's got a significant amount of expertise in distressed assets and a very extensive network in the mining community to help with advisors and potential takeout partners.
And just another point, the initial Novawulf plan included putting some of the mining rigs tied to a coal energy plant, which also kind of reduce the value of the entire company, because you are mixing renewable energy with coal energy. And again, just be careful who you listen to. Most of the people on the Celsius network and the Ionic Digital community, they do not run the numbers. And we have to be honest here. If you are a large shareholder or have large claims on Celsius, it probably means that you made a mistake on doing proper risk management or just some due diligence, because there were some red flags. And just be mindful that if you are looking at someone with a large claim as a point of reference, you might be falling in a sort of survival bias, because you are looking at someone that did not do its proper risk management and due diligence on Celsius network. So what I'm basically saying is that someone that took his money out of the company a month or something like that probably has more value to give to you than someone that didn't. I've listened to a lot of takes by people in this community which made no sense, and they say that with full confidence. You also can't overlook the level of dishonesty and manipulation that still exists in this community. which I find it disgusting, especially towards victims and creditors, with all things considered. So in this comment, you see someone telling that the company blew up 100 million since January. But as I show you, 70 million is invested in Cedarville, and the rest, basically the company exchanged cash for Bitcoin, and cash doesn't really appreciate in value. So yeah, when it comes to Ionic Digital, the company, it doesn't mean that the company has no risks. It just means that currently, based on the public information, especially when it comes to operation and financials, the company is more or less in control. So that means that, as you've seen by the graphs, if you liquidate the company right now or maybe on December, it shouldn't have a massive impact as long as Bitcoin remains at 55 to 60,000. And in order to assess the risks of Ionic Digital, you just have to understand this graph and be on the lookout for these metrics. So here you can see the expected mine Bitcoin. This is a projection based on the previous average. And as far as half of the September, we are in line with these values, according to Arkham Intelligence. So we have around 2,000 and something Bitcoins. Arkham Intelligence is missing 69 Bitcoins. So once you add that, you are in line with these projections. The other issue is that you have to find the current costs. And because Ionic Digital is going long on Bitcoin, by knowing the cash, you can figure out the costs. But basically the problem arises when you have a deviation from this line. So this line starts to come lower, and the cost, the red line, stays the same or even increases. It's here that you have to be on the lookout, because this kind of signals that Ionic Digital will have to sell their Bitcoin, and that's where you have more risks. But I will be keeping track of these metrics, and I will sound the alarm if something changes that requires maybe some shareholder action or some inquiries from the company. And in the case you want to understand if the company has become more valued, you just have to look at this projection. So for example, here in October, if we have at the end of October more than 2,226 Bitcoin, we are having a better execution. Probably it means Cedarville is being more profitable, and the same applies for cash. So anything above this, it's very positive for you as a shareholder. And the metrics like the number of Bitcoins that the company holds or the current cash position, among others, should be coming starting October, so probably around October 10.
We expect our updates will also include certain operating metrics each month, which may be similar to what our publicly traded competitors post.
And this will basically allow you to figure out the value of the company. So yeah, just listen to everyone, try to remain neutral and focus on the numbers. Be wary of personal attacks. I usually avoid them because when someone resorts to them, it often means they lack logic or can't engage in a fact-based discussion. We also unfortunately have a few narcissists that, for example, have posted predictions that were wrong by a margin of 80%, or simply say things that are demonstrably false. But by blocking criticism, they create these bubbles of misinformed creditors, and that's usually how you end up getting scammed. But in the end, the only benchmark that matters is whether liquidating the company in January would have provided a better return. But now that we have the cash and Bitcoin position, and as I show you, that's either not true or just negligible.